Welcome back, and we're joined by Manav Chopra from Nuvama Institutional Equities to get a perspective on markets and how one should play it at this point of time. Excuse me. Hi, Manav. Great having you. Let me first start off. I know you're more bottom up, but give us a sense first, top down. Where are we at this juncture? You know, we're in this. It feels like the market is stuck, right? And plenty of headwinds. You've got AI as a big headwind. You've got crude as one of the bigger headwinds, and then you've got US bond yields which have crept up. So, and then emerging markets outperforming and more favored by flows as well. How should one look at the Nifty at this juncture?
Right. Thanks for having me. So, see, the
Great.
markets are actually kind of starting to bottom up. We started this bottoming process all the way from recent April, another leg down in the markets because of the global escalation. And then again, from June onwards, there was a very good scenario where the BFSI took the leadership. Uh, my sense when we're looking at the broader markets in general, this is the seventh quarter on the Nifty front where the markets are still consolidating but forming higher grounds. Hence, it is more like a bottoms-up market. We are not in a market environment which would reward breakout and momentum, and I think that will happen eventually at a later stage. But currently, with the headwinds that we're facing because of the crude and also because of the elevated US 10-year yields, I think that is just keeping markets rather than rushing away, it is giving more opportunities on the base segment. But important to look at is, Nifty 50 is giving a very different picture compared to what the actual market is. When we look at what next 50, that is the Nifty Junior, it is still showing a strong bit of outperformance versus Nifty 50, hovering near its all-time highs. You see what the mid caps and the small caps are doing. It's kind of at all-time highs and testing its important support zone with relative outperformance still improving. So for me, I think this is more like a short-term pullback, and only we will know whether this pullback leads into some deeper correction. But as of now, there are no red flags. More or less, yes, the breadth of the market can turn on the neutral basis on the short-term phenomena, but largely we are still in a very constructive environment. More so in last few weeks, we've seen Nifty versus emerging markets already outperform by 10%. So I think Indian markets are forming some positive green shoots. We've just got stuck into another leg of escalation. But other than that, I think it's going to be more like a bottoms up for the near term.
But with a positive bias, Manav, that's how I'm reading your commentary. And it's a buy on dips, right? And more on the next 50 than the Nifty 50 than the frontline names. Broadly, that's the tilt.
Yes, absolutely. I think this market, when we are looking at the Nifty 500 to Nifty 50 ratios, also the mid cap to the Nifty 50 ratios or the next 50 to Nifty ratios, these are some very good classical signs of an early stage of a bull market. Uh, uh, Obviously, what we are witnessing is more like a strong churn or coiling in the Nifty 50 few stocks. Other than that, I'm quite confident we have already into first phase of a bull market, and more so, the expansion of the trend would be seen eventually in times to come. But I think one should definitely look to deploy. There is no reason to be cautious, despite of whatever the short-term hiccups we are seeing. Yes, the momentum will come back, but looks very, very strong. There are a lot of pockets into the mid segment within the BFSI, which has already taken a very strong support currently at its important key trend line resistance. If you are drawing from the April lows, the mid caps have again retested its previous highs of 2020, 24, 25, which is again providing key pivot levels. So I think we are at a scenario which will be rewarding, but more or less we are ending this stage of consolidation eventually.
Manav, it is very difficult to kind of fathom how the Nifty will move up without the two biggest laggards and the two heaviest sectors, banks and IT. And essentially, they've been big laggards, right? I mean, there's huge rotation at play within the Nifty bank and not so much in the IT space, but within the Nifty bank. But that means that the Nifty bank has been where it has. I mean, we've not seen much of a move on the Nifty bank. The heavyweights need to start participating. What about them? Your view?
Absolutely. But before I answer your question, I'd like to share one perspective. If you look at Nifty 50 index on the weighted side that we all look at, and there is another perspective that is Nifty equal weight. If you look at these two indices, they are in a very different tangent. The Nifty equal weight is almost closer to its all-time highs, and it's like 3 or 4% away. So it's only what you just mentioned. It's only 5 to 6 stocks which have actually held the markets, and that's where the headline indices are showing a different picture other than what the broader market is showing. I think it's a matter of time. This clearly indicates that the leadership is moving from certain large cap pockets and getting into the beta, and that's where the main alpha is usually generated. I haven't seen any such formation in the past where the equal weight index and the broader markets are at highs, where the ratios are intact, the breadth is neutral to positive, and the market usually tanks. So I think the construct is very much to our side. Uh, to update you on the BFSI part of it, which you rightly highlighted, I think if we see the private bank ratio to the markets, that is the Nifty 50 ratio, they have seen a breakout after 2021. So their underperformance, the private bank underperformance more or less has completed. I think it's a lot of sectoral churn within the larger sector it's playing out. But like I said, we are still in that, eventually bottoms up phase, and that is going to take some time for the markets to coil. So the perspective remains focused on the broader markets. Certain sectoral pockets is where there will be more bull phase, but Nifty eventually will gather steam going forward, and I think it's a matter of time.
What about IT, Manav? Because that's one of the very hotly debated sectors at this point.
Right. It's quite difficult to honestly take a bet on IT, but when I'm looking at the monthly charts of IT, you've already down 35-40%. After a long time, there is a intermediate short-term reversals happening in IT. Not that I'm recommending a buy, but it is definitely going to show some bit of a comfort, at least of IT providing a floor for the Nifty 50, which has been one of our key concerns in last so many months. The Nifty, the IT index has rallied from its recent lows of 29,000, 26,000 all the way to 30. I think it was going to take some matter of time to just, digest, see some volatility, but eventually, uh, my strong perspective is that at least on a near-term basis, IT is kind of at a stage of bottoming. It might not see that run up, but the fact that IT starts to base out is going to be one very good confirmation that we are looking into. In fact, when we look at a lot of small cap IT names, I haven't seen so many blocks happening in a short time span of window, which is definitely indicating that, at least on the price front, there has been some accumulation that has been witnessed, which is giving some bit of a comfort. So I think IT index I'll be watching very closely. Once if it starts to break 31,000 on closing basis, I think that's what will bring back the short-term reversals and the momentum back into the IT index.
Makes sense. What about some of the consumption-related kind of plays? Auto, FMCG, retail, and the like. You believe that those pockets? I mean, auto has done ever so well, right? All three have performed very differently. But what next? I mean, are there opportunities in each of these, or would you prefer one of these three, or how should one play it?
So, the FMCG space is going to be a big laggard. I don't see any reason of, trying to do a bottoms up, at least in FMCG. The classical staples, the HUL, ITC, I think this sector as a whole is going to witness a lot of underperformance, and this trend will continue. For that matter, even autos, they have shown that outperformance, but they are coming to a point of resistance zone. So the consumption as a pack, honestly, is going to be more to be viewed on a tactical perspective rather than a buy and hold. But yes, within the consumption, I think I like auto angs for a medium term, long term perspective. I think the whole space is going through a very strong amount of an accumulation, and they have seen a good amount of outperformance lately. But I think over the period of time, the auto angs will do well. Tires as a segment within the autos are at the lower end of the stage where the bottoming process could start. So there'll be certain pockets which would be played. I think one has to have a very different perspective in terms of the stock selection part, but FMCG for us remains an avoid. And if I'm going to the other part of the consumption, yes, real estate has shown some early bouts of short-term reversals, and eyeing very closely whether we see an upside leg, but that is more probable. And also along with that, the right consumption play would be playing the new age consumption, that is the internet names, the Paytm, Eternal, even Nykaa for that matter. I think that's where a broader, the medium-term breakouts have already played out, and I think likely that these stocks will form a base formation and continue to see an upside momentum. So playing consumption is going to be more tactical, more so being very, very stock specific. So I'll prefer to play auto anchors and only new age consumer names.
Metals, Manav, this has been a favorite for you for the last 15 to 18 months, right? And it's played out beautifully. But you've seen a bit of a cool off, maybe 10, 12% on even some of the frontline names, Tata Steels and the like. Good opportunity to buy on dips, or do you continue to hold, or do you liquidate at this point? How should one play metals?
Okay, so metals have seen a very fantastic run up the whole of last year, and along with metals was the PSUs. So these two were the darling sectors of last year, and more importantly, what we have witnessed in metals and PSUs is nothing but a healthy profit taking and a correction. Uh, if I, coming to the metal as a space, this sector has already declined around 12 to 15%. The PSU banks is down by 20-25%, and my guess is, at least in the near term, the price correction phase is nearing an end stage, which is a very, very positive factor. If you look at the dollar index, it has also rallied from its recent lows of 92 or 93, 94, hovering closer towards 102. And, at best, I don't see dollar index exceeding below 103. So we are coming to a point of an inflection zone where dollar index probably sees a halt, starts seeing a downside, and the correction or the price end phase into the metals come to an end stage. And hence, this sectoral rotation keeps moving around. So yes, metals and PSU banks have seen a good correction. They are coming to a very strong scenarios of buy, but the kind of alpha that it witnessed in year 2025, not necessary we will see that kind of a momentum leg up. But yes, one of the price floors are very much there on the cards. And within that, I think if you look at the aluminum charts, they too have seen a good amount of 20-25% kind of a correction and also kind of consolidating. So metals as a pack is something very watchful for the near term. I think the price floor is near term, and a lot of indicators are suggesting that the price pain is near the end stage.
The other one, Manav, which you were bullish about, and of course PSUs you covered, metals you covered, were the Adani group of stocks and some of the infra plays. That was the other pocket which you seemed quite bullish about the last we spoke. What next on those? Any updates?
Yeah, so we have been very early bullish on the Adani as a pack. We wanted to play the infra and mainly the Adani as a whole group. I think they have done fantastically well, but undoubtedly, they have seen a good run up of 40 to 50% range. A few stocks are kind of consolidating. Few of them have declined. Name like an Adani Power has seen a good amount of a healthy correction and seems like a good profit taking scenarios. But my case is that these stocks like my top bet remains Adani Ports, Adani Power, and Adani Energy Solutions. These three still have another strong leg up. I think the next leg up into the markets whenever the momentum factor comes back, I think Adani as a group will strongly come back. Within the infra space, GMR Airport is another name that I strongly like. The stock has witnessed a good weekly breakouts happen a couple of weeks back. Again, the stock is kind of consolidating and pulling back. So, Adani Group with GMR Airport, along with certain names like BHAIL and ABB, these combination all together seems strong. No presence of any sort of a strong distribution or topping out signal. I think they are more or less consolidating, but that's where the bottoms up begin. I think it's a good time to lap up certain of these names where we do see another leg stretch coming shortly once the market completes its correction phase.
Anything else that you're liking at this point of time, Manav, that you'd go long on?
See, one of the other parts that I was evaluating is within the healthcare, the diagnostic space. I think we haven't seen anything much coming out of it. A lot of names are kind of in a consolidation phase in last 3 to 6 months. Name like a Metropolis or specifically the stock has been consolidating. So this This is a space where the prices have been witnessing some subtle accumulation, minor higher bottoms, strong volume delivery built up happen, and this entire space is going through a good positive transition where it has been in a lull period for a longer period of time and now stepping up. So I think the breadth of the market internally is improving rather than deteriorating. It is just few sectors which are correcting, is keeping markets little vulnerable. But other than that, I think a bottoms up market is playing well. Cement is another space which is looking very good for a bottoms up, mainly the small cap names like a JK Cement or Ramco Cement. Majority of these stocks are down by 15-20% and showing some early bouts of accumulation and base formation. So, these are two pockets where we haven't seen any major traction in the previous rally, where the small caps attained its all-time highs. Now, I think going forward, they will participate accordingly.
Okay, Manav, thank you so much. Always great chatting with you. Thank you so much for coming in and speaking to us. All right,